Today, we're diving into a really powerful tool for short-term trading. It's called the 535 MACD. Have you ever wished you had a clearer, real-time picture of market momentum? To spot trends just as they're taking off? Well, you are in exactly the right place.
At the end of the day, everything boils down to this one question. Is the market gaining strength, or is it losing it right now? And this is the exact question the 535 MACD is built to answer. It's designed to just cut through all the noise and give you a really clear visual read on the market's underlying power.
Okay, so here's our game plan. We're going to start with what this thing is, this momentum detector. Then we'll learn to decode its visual signals. After that, we'll peek under the hood at the code, lay out a practical trading playbook, and wrap up with some really important warnings and best practices. Let's get into it. So first things first, what exactly is this tool? Well, you can think of it like a souped-up version of the classic MACD that you probably already know. We've just fine-tuned the settings to make it much faster, perfect for the high-speed worlds of scalping and day trading. And its speed? That's the whole ballgame. On the left, you've got your standard MACD. It's kind of like a turtle, slow, steady, and great for longer-term swing trading. But on the right, our 535 version? Oh, that's a cheetah. It reacts almost instantly to price changes, and that's the kind of responsiveness you absolutely need for those quick 1 to 15-minute charts. All right, now for the fun part. Let's actually decode the 4 main signals this indicator is sending you. This is where we learn how to turn all those colored bars into real, actionable trading ideas.
So, the most basic signal you'll see is the zero-line crossover. It's really simple. When the bars cross from below the line to above it, flipping from red to green, that's a hint that bullish momentum might be taking over. And of course, when it crosses from green down to red, that's a pretty clear sign the bears are waking up.
But it's not just about the color. The size of the bars tells a huge part of the story. When the bars are getting taller, that means momentum is picking up speed. But here's the key. When those bars start getting shorter, that's your warning sign. That means the trend is running out of gas, and you might want to start thinking about an exit.
Now, for a more advanced signal, and this one is super powerful, it's called divergence. This happens when the indicator basically disagrees with what the price is doing, giving you a heads up that a change could be coming. So let's say the price is making new lows, but the MACD's lows are getting higher. That's a classic sign a downtrend is weakening, and a reversal could be right around the corner.
And this right here, this is a great little cheat sheet. The indicator's position gives you a quick read on the market. When those bars are way up high, far from the zero line, the trend is strong, ride it. But when they're hovering close to zero, the market's just chopping around. It's indecisive. And that's your signal to just stay on the sidelines and wait for a clearer picture.
Okay, so you get the signals, but what's actually going on behind the scenes to create them? Let's take a quick peek under the hood at the Pine script. Don't worry, we're not going to get lost in the weeds here. This is way simpler than you might think.
So, the script starts with user inputs. A really simple function called input.int is what lets you go into the settings on TradingView and easily tweak the 5 and the 35 to whatever you want. The best part? You can do all that without ever having to touch a single line of code. It's all about making it your own.
Now, the real engine of this whole thing is the tat.mema function. This calculates the exponential moving average. And that word exponential is so important because it gives more weight to the most recent prices. That's the secret sauce, really. It's what makes this indicator so incredibly quick to react to what the market's doing right now.
And honestly, the entire logic just boils down to these 3 simple steps. The code calculates the fast 5-period average, then the slow 35-period average, and then it just subtracts the slow one from the fast one. The number you get from that, that's your MACD value. It's really that straightforward. So, how do we get those iconic green and red bars? Well, there's a clever little bit of code called a ternary operator. Think of it as a super compact if-then-else statement. It asks one simple question. Is the MACD value positive? If the answer is yes, color the bar green. If no, color it red. Simple, elegant, and really efficient.
All right, let's put it all together. Theory is one thing, but we need a practical playbook, right? So here is a simple strategy for applying these signals. We've designed it specifically for a 15-minute chart, because that's where this tool can really shine.
Okay, for a long entry, a buy, the rules are crystal clear. First, you wait for that clean crossover from red to green. Second, and this is important, you look for confirmation. A spike in volume is perfect. It shows there's real power behind the move. Once you have both, you enter and you immediately place a protective stop loss just below the most recent price low.
And for a short entry, a sell, the logic is just a mirror image. You're waiting for the MACD to cross below that zero line. You want to see those red bars start to get bigger, confirming that downward momentum is building. Then you enter, and you place your stop loss just above the recent high to protect yourself.
Okay, now before you rush off and start using this next part is absolutely critical. You have to understand the risks. This is a highly sensitive tool, and if you use it without knowing the pitfalls, well, it's a recipe for disaster. Let's talk about how to use it responsibly.
You know, the single biggest mistake people make is over-trading. Because this indicator is so sensitive, you just can't take every single crossover, especially in a sideways, choppy market. It'll just give you false signals all day long. The key here is patience. You have to wait for clear momentum and always get confirmation from other factors, like price action or volume, before you even think about placing a trade.
And that brings us to what is probably the most important rule in all of trading: protect your capital. With a fast-moving indicator like this one, things can go wrong in a hurry. So having a strict rule where you never ever risk more than 1 to 2% of your account on a single trade, that's not just a suggestion, it's non-negotiable if you want to be around tomorrow.
Finally, just remember that no indicator is a crystal ball. The 535 MACD is at its most powerful when it's just one tool in a bigger toolbox. For example, a classic combo is using it with the RSI. Why? Because the MACD shows you momentum, but the RSI can tell you if a market is overbought or oversold. So when you get a bullish MACD crossover at the same time the RSI is coming out of oversold territory, now that is a much higher probability signal. So at the end of the day, this 535 MACD isn't just a bunch of lines and bars on a chart. It's more like a visual story of the constant battle between buyers and sellers. And it's telling you who has the upper hand right now. The real question is, now that you know how to read that story, how are you going to use it to anticipate what the market does next?
Like, share, and subscribe now for more videos.